The Senate has actually posed two questions. All the focus has been on the specific issues of the way the CBA in particular handled the compensation from the disasters of its financial planning advice, where its financial planners grabbed at big commissions to put people, savers, into disastrously risky investments. So yes, that's a big issue. Quite whether we need a Royal Commission, I think is probably taking it too far. We certainly need some sort of inquiry into the specifics of the case with both the Commonwealth Bank and Macquarie Bank in how they handled the mess they got their savers into. But the bigger question is really the more important question, and this is the whole issue of financial advice, which remains a murky, unresolved mess in terms of both what the existing situation is with the Labor government's FOFA, Future Financial Advice reforms, and what the new government is proposing to do to haul those back a little bit. I remain completely unconvinced that we're going to get a rational, effective system of regulation and an effective system of financial advice directing your savings into the best products going forward. And another big issue in all this is the huge level of fees that continue, whatever the regulatory structure, that will be pulled out of essentially your savings. Something like $20 billion a year of fees which are being sucked into the system, which obviously are not going to be there to be part of your savings and are not going to be there to earn income on your savings. So, big questions still remain with this whole area of financial advice. Now, maybe this was not the week that the seas stopped rising, but it was certainly the week when maybe your power bills will stop rising. With this bizarre exercise that took place in Canberra, but with Clive Palmer and Al Gore, but at the end of the day came down to something very simple. Clive Palmer will now get his senators in the Senate to vote for the abolition of the carbon tax. So, and he's insisting that the full savings be passed on to you in lower power bills. So there will be a big drop or a significant drop in your power bills, and you won't face the prospect of them continuing to increase in years to come if the carbon tax would otherwise have gone up. Quite what's going to happen in the whole area of carbon abatement, though, remains very, very foggy, to say the least. Clive Palmer doesn't like the government's direct action abatement proposals. He's going to vote against that. He wants to have an ETS, initially with a zero price. That's not going to happen either. But he also wants to retain the RET, the renewable energy target, which is another big factor in high power bills. So we're going to see how this all plays out. But the one thing which we can take with some confidence is that finally, at the end of this torturous process that has gone on since the 2010 election, the carbon tax will be no longer. Self-interest also paid off big time for Solomon Lew this week. But it does help if you're in his situation and you've got a spare $200 million that you can slap on the table to win you a seat at the big poker game. He outlaid $200 million to buy into the David Jones situation, and he got his reward, as we know this week, when Woolies, the South African Woolies, said, yes, it will bid for Country Road as well, and will take Solomon Lew out at a very handsome price. And he gets to sell his David Jones shares back to Woolies at a very small profit. So it'll essentially wash its face. But he's going to pocket a huge payday in relation to his Country Road shares. Net, he's probably going to get close to $200 million of profit. And the government will be a bit of a winner as well, because they'll pick up about $40 to $50 million in capital gains tax. So it's a pretty good outcome all around. It actually makes sense for Woolworths to end up with 100% of both David Jones and Country Roads. It will have a far more rational, far more effective retail business to build on. It's paying a hefty price for that small part of David Jones, which it picks up from Solomon Lew, but it makes sense and it'll be able to go forward because it really wants to build its future in Australia. Finally, in all this sort of craziness and action and bizarre behaviour, we can look forward to one little patch of Sanity and Serenity. It's way above Martin Place in Sydney in the boardroom of the Reserve Bank. Come Tuesday, they will take the calm decision to leave the interest rate unchanged yet again, and they'll also tell us that they're going to leave it unchanged pretty much into the foreseeable future. It's a good time for the Reserve Bank to inject that calmness into our economic and financial situation. We really don't want to have uncertainty about interest rates as another factor going into your decision making, whether it's as a business owner, or as an investor, or simply as an ordinary Australian.